Welcome to Lock in Your Success. We are the company that creates strategies to build wealth. This webinar reviews real-time hypothetical trades each week while analyzing market conditions with adjustments. Questions are always welcomed, asked, and answered. Before we get started, we need to go over our disclosures. Locking Your Success LLC is not a broker-dealer or financial advisor. This presentation is for educational purposes only. This information is not an offer to buy, sell, or hold securities. You shall be fully responsible for any investment decision you make, and such decisions will be based solely on your evaluation of your financial circumstances, investment objectives, risk tolerance, and liquidity needs. Please visit cboe.com to find and review the options risk disclaimer prior to placing any trades. Also, please note that these are real-time but hypothetical computer-simulated trades and results. The trades are believed to be as accurately presented as possible, however, they are not guaranteed as to accuracy and therefore live results may vary. No representation is being made that any portfolio will or is likely to achieve profits or losses similar to those shown. Whew! Now that that's over, let's get to it. Here is your host, John Locke.
Good morning, everybody. Welcome to the Options Trading for Income Weekly Update with Lock in Your Success and myself, John Locke, for September 28th, 2015. If you're watching this on YouTube, listening on podcast, visit our website, lockinyoursuccess.com. That's L-O-C-K-E, inyoursuccess.com. Join our mailing list, get your free report, The 7 Secrets to Becoming a Successful Trader, and sign up for this free weekly webinar. Also, while you're there, check out our trading programs. We have the super simple spread trades, the M3, the bearish butterfly, the rock, the M21, and APM squared. Quick overview. In this update, we're covering 4 trades that are related to the programs that we have. We have the bearish butterfly, we have the M3, we have the rock, and we have the V condor. We're doing simulated trades, real time, and showing you the results. I've been doing this in one form or another since about 2011. And if you go to our blog at lockinyoursuccess.com, you can see the recordings for videos we've done for years. So get a good idea of what the programs are about and the type of trading we do here. Also, if you're an Options Tribe Premium member, you can join me for my Monday morning live trade review, where we cover a $1.25 million M3 style trade that is live. We also have a bit of a question and answer session, and that's at 10 a.m. Monday mornings after this update. And if you'd like to be able to access that, you need to sign up for Options Tribe, and here is the link right here where you can do that. Also, if you have not yet done so, please send in your results for the 2016 Hawaii Lockup Challenge, as well as your trading plans and your results for Successful Trader of the Month, and possibly win a hat and free admission to either Hawaii or one of the other live events that we're going to be doing over the next year or so. So we are planning more live events as times go along, so that'll be a lot of fun. So go ahead and do that. Also, remember that we are starting our Lock Options community. Sherry's working on that very diligently to get the forums going and up and running. And also we're going to be doing our community coaching, which is going to be 2 sessions a month, group coaching type of format. We can answer questions about your live trades, go over some stuff that we have that's live, and do some lessons and questions and answers and so forth on all of our things. So that's going to be a lot of fun as well. So make sure you, if you're interested in that, come here, check out this link, lockinyoursuccess.com/coaching, Lock Options Coaching and Community. Sherry will help you with that and put a link up there for the video. And that's all we have for announcements. So let's take a look at what's going on in the markets. Last week I was thinking that it was going to be a down week. Thought we were going to come down at the 1140s and likely reverse. I was actually a little bit bullish for the end of the week, so I figured earlier in the week we'd drop down maybe this 1140 range, pop back up into 1190 or so. We came down lower than expected. With where we've come, you would think that the Russell's going to try to make a run for 1100 here and maybe maybe exceed it a little bit, do a double bottom, and then bounce higher. That said, if we take a look at the SPX and we go to our shorter term charts here, the SPX actually held its support levels here, its shorter term support levels. And if you look at the NASDAQ and the Dow, they did the same thing. So we're kind of in a situation here where the Russell kind of broke down a little lower than expected, but the other indices, they didn't do that. So basically what I'm watching here is I'm going to be watching this 1910 level in the SPX. If it holds, Russell's probably not going to go any lower. It's probably just going to bounce higher. And we'll get up into, closer to the 1190 range, I think, maybe later on this week or possibly next week. If it breaks down from there, then we're probably going to see 1100, possibly 1080, but I don't think we're going down that far. 1100 wouldn't be a surprise, though, at all. So that's what I'm thinking for the markets. I'm still thinking longer term we are going to be relatively sideways, unless, of course, we get a breakdown of this 1100 area, in which case that's going to change. At that point, 1140 is certainly on the radar for a bottoming point. So keeping that in mind, that's what I'm thinking. Maybe a little bit lower here if the S&P breaks down. If not, we're generally going to stay sideways between, as I was saying last week, between this 1200 and 1100 range. Very wide range, but that's what we have right now. So that's what we're dealing with. And let's go to, let's take a look at what our trades are. I just had a comment that someone wasn't sent the 10 a.m. link for Options Drive. If that's the case, please email them, Seth, because I don't have any control over the Options Drive links. Oh, Mike was saying it just went out. Okay, so you should be getting that shortly. All right, so let's go to our trades here. This bearish butterfly, as of last Monday, we know we have an exit day, 21 days to expiration. We were up about $5,000 here. We were positioned like this. This was perfect for what happened this week, right? We had a pullback right into the top of our position here at the end of the week. Realistically, if we hit the top of the position during the week, I would have exited it. I think I was talking about that last week. But we just had a little pullback early in the week. Then we bounced a little, and then we came right back, right near the peak of this, and that happened to be on Friday. So that being the case, if we go to Friday, this is what the position looked like. We were up, actually higher than that. Let's see, I think that was a low post number. Right, we're actually up near our profit target much of the day. If you were watching this during the day, we were popping from anywhere from about 12,000 to about 18,000 profit and loss. By the end of the day, when we went to close it, if we go to the reports here, this actually ended up about 16,000. And well, anyway, this was closed out on Friday as per guidelines. I don't know why that this is not updating properly. But anyway, I'll update that and close it. It closed out right around 30% profit target when it closed. So really, really nice trade for the bearish butterfly for October. Someone said they exited at 33 and should have still be in it to milk it. Yeah, so yeah, had you, by the guidelines, we exit 21 days to expiration, certainly up near a 30% profit target. Beautiful, beautiful exit. And we had a lot of other traders in this trade as well that did really well this month, so that's awesome. Yeah, I mean, sometimes those are the guidelines to exit it. Yeah, if you held it till today and the market didn't move a whole lot, then yeah, you could probably exit for a lot better profit today. But the reality is 30% is a nice profit, and we could have got a 40-point gap down this morning, or a 30-point gap down this morning, or a 20-point gap up, or something like that, and you would have lost a lot of profits. So I mean, you never know what's going to happen in the market. Certainly reasonable to take it at anywhere near. Realistically, it would have been reasonable to take it at a $5,000 profit. Like I said, our guidelines say to get out 21 days to expiration if you're over $5,000. So really nice trade this month. But anyway, that's a bearish butterfly. Can I show the whole T-log? Yeah, that's really easy. This is the T-log here. Doesn't show the exit. I'll have to put it in there and go into BackTrader and actually put it in there. But we simply entered the 1130 puts. The market went up enough to get us into our 1150s, and then it backed down. That's the perfect trade. This is exactly what you want out of bearish butterfly. It happens about 2 to 3 or 4 times most years. You get a year like 2013, I don't think it happened at all, but in general, you're going to get this 2 or 3 times a year, and you get these really, really nice, easy trades. We've got a lot of easy trades with this year. Perfect environment for a bearish butterfly. I think if you add up the returns for the year, we're well over 100% already, so very nice here. Let's go to our next position here, which is going to be our M3 trade. So if we take a look at Monday morning and we move over to our M3 position, this had a little bit of a harder time. If you remember, we entered this trade, we had this went through that crash move that we had with the really high volatility. We ended up adjusting this back in an environment that was not very friendly. So this got drawn down quite a bit. However, it's recovered. As of Monday, it was the end of the day Monday, we're down about $491, and we're just sitting here in these 1130 butterflies. Didn't need anything of Friday, but if we run to Friday, we were pushing too high of a positive delta. We're behind the short strikes. And again, I'm getting different numbers out of OptionView right now. One of the things that happens with OptionView sometimes is the asset files get corrupt and the Greeks kind of go all over the place. And I think that might be happening to me now. Either way, we are behind the short strikes, so legitimate reason to do a rollback in an M3 trade. And if we go to 1500, right, we took this, we rolled back to our 1100s short strikes, put 10, 1100, 10, 1110 verticals, remained positive delta, and looking at a position that looks like this. If the market's stable, if the market goes up, we're in pretty good shape here. Of course, if we get a crash, we'll be fighting that, but I don't think so. I think this will be a fairly nice trade for the month. It's just going to take a little while for us to accumulate some profits because we got drawn down in that large move. And somebody said, I watched a lot of selling in October 1130 Butterfly and Interactive Brokers options trader Friday afternoon. Yeah, we probably had a lot of people who were maybe selling out of some 1130s on Friday. It wouldn't be a surprise because I know there was a lot of open interest at those 1130s. So on entry date, a lot of us were in those. Andy was just asking me, how do I know the asset files are off? I don't know for sure. I just know that when I was doing this Friday, I was getting different Greek numbers, and they shouldn't be that different. So I suspect that they may be off. If that's the case, I have other students. I'll go and compare them to, and I have other versions of OptionView too. I run on different computers. I'll just compare I'll come in here and I'll compare the Greeks numbers to see if they're reasonable or not. It's not unusual for OptionView to be a little bit different on the asset files, a little bit different readings. That's normal even in the same system. In other words, a lot of times if I go forward and back, I'll get different numbers because it calculates them fresh every time. But if they're a little bit different, that's fine. See now they're 24.97 just from moving back and forward. If they're a little different, that's pretty much normal. But if they're drastically different, then that's a problem. I remember the numbers being different on Friday than what they're showing here, so I might have an asset issue. I might not. It might have just been a quirk, but I'm suspicious of that right now. So these numbers might be a little off. And okay, so that was essentially the M3. I also got a note that I thought the rollback guidelines was 10 points under the short strike. Yeah, 10 points under the short strike or a delta issue. Realistically, I'm open to rolling this anywhere below the short strikes. I'm open to rolling back. If I'm hitting anywhere near a delta limit, then I'm going to tend to generally roll these back. If you're a trader who likes to play things a little bit safe, you can roll these back when you exceed the short strikes, I have other traders, like if I'm trading a rock trade, you'll see that I'll be doing a rock trade. When we do the rock trade, take a look at the rock trade, I usually let that exceed the short strikes, primarily because we let the rock trade draw down a little bit more. I think in the M3 program it might say 10 points under the short strikes. I think you may be correct with that. Or of course if we have a plus 50 delta area, that's also due for a rollback. So my point is here, when I was looking at this actually let's, if I take this trade out, I believe I was over delta limits, so this might be at 1530. Let me just go to 1530. Yeah, so I wasn't over delta limits. Yeah, I was. So see here. So so it's possible I don't have an asset problem. I'm looking at here, if I go in, I pulled the trade out of the T-log, I'm over my delta limit here. So things probably are okay. So this is just a little bit of self-checking here, because I knew on Friday when I was looking at this, it was over positive 50 delta, and that was the reason for the rollback. So I'll go in and add that rollback in for the next update, but that's the reason. All right, so at our rock trade here, October rock trade is here. This position also got a little bit of moving around because we're at way up at the 1150 short strikes. So yeah, thank you. And Frank just noted to me that we can actually ignore the trades with this new release instead of deleting them, which is a good thing to do. So should have done that. All right. So anyway, this is where we were with our rock trade as of Monday. This position here was okay till Thursday, in which case, if I ignore the trades of the day, we were, thanks Frank for reminding me of that. If I ignore the trades of the day, I am below my short strikes. I am over our maximum positive delta limit. And I look like this. So if we put the trades back in, we rolled back to 1110, and we did those same 10, 11, we did 10 verticals here at 1110 and 1120, brought us to slightly positive delta, and there were no further adjustments from there. So if we come here on, let's see, Rock Thursday, that's it. If we come to Friday, we've got an 18-point down move. We are pushing our positive delta limits for a rock and M3 positioning. Again, we allow a little bit more than positive 50. A lot of times we'll let this go to plus 100. But in general, this is what we look like here. We're up about $900, and here is the position. If we get a continued down move today, we'll have to do something here. This is a little bit. This is at 1110 instead of 1100 where the M3 was. So that is the M3 position. And I just have a note from Daryl that is what my M3 looks like. Unfortunately, is what my M3 looks like still. This, probably before the adjustment. Okay, so I'm assuming you mean that you were here maybe on Friday, and didn't make an adjustment to the downside, which would be problematic. Yeah, this is definitely due for an adjustment. So, all right, that's all we have for the October rock trade. We have an October V Condor, which did not get any adjustments. Thus far, this is a month where you would be much better without the V. When the market gets choppy and sideways, this does not tend to perform that well, but it's doing okay. We're still very well positioned here, not really a problem. We would have liked to seen the market grind up into this area or something like that, but as of right now, there's no guidelines, reason to actually do anything with this. We're just sitting here waiting for us to actually hit a positive delta limit at some point. and we'll make an adjustment by widening this V out. But as of right now, there's nothing going on with this trade. Currently up about $1,900. If we had a November V Condor that we had started earlier that looks like this. Again, no adjustments here. Because the volatility is high, this is very, very wide. So we have to zone out. This position looks like this, which is, again, perfectly fine. And on Friday, we had entries of a bearish butterfly and an M3 trade. So for a bearish butterfly, we just did the standard entry, which was not shown. Oh no, here they are. 925, 1530. Let me redo the trades. Here was our entry. We were at about 1123. We did 1100 short strikes. $7.90 for butterfly. 56 days to expiration. Compare that to 2013 when we're paying $15. Fantastic environment for butterfly trades. Only coming in with a minus 56 delta. Would I have preferred to put this in on an up day? Yes, I certainly would have preferred that. But either way, just fantastic pricing right now. So very high probability trades for the bearish butterfly. A great, great environment for them. And as is being seen in the results, right? So there's what we have. And I also entered an M3 trade, which went in at the same strike, the 1120s. I did one call at 950, which is as lowest option view would show. Would have liked to gone deeper in the money, and I could have forced added strikes, but that's just going to be problematic for the presentation. So we just this is fine. Did the 950s, and because the volatility is so high and butterflies are so cheap right now, I had to go with 17 butterflies at 1100 to balance off that call. So this is everything that we have open right now. And if we take a look at this position, beautiful, nice flat T plus 0 line here. So very high probability trade. So the times are generally quite well for most of these trades, except for the V Condor. Like I said, the V Condor likes the market to travel a little bit, and the market really hasn't been traveling a whole lot. So, and that's what we have. So are there any other questions moving forward? No, it looks like actually we are all set. So thank you for joining me, everybody, and we will join you next week. Bye.